You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike Tusaw from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is time once again for the old Option Block, a.k.a. your bi-weekly source for all things options related. A little bit of wit, a little bit of wisdom, some analysis, some unusual activity, a whole bunch of education, and your questions, and sprinkle it all together. You got the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as from the ever insightful, at least we hope so, Options Insider Radio Network. Reminding you, wherever you get this, could be on any platform under the sun these days. Keep rating and reviewing. It does help the new folks continue to discover the content, not just this show, but everything we do here throughout the week. Of course, keep those questions and comments coming too. We do love to hear from all of you guys and gals out there. And let's see who we're hearing from on the old program today. First, let's go out to the dark, the stormy, the turbulent shores of Maine, where I happen to have it on good authority that the clam pirates are back in force. We are joined once again by the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com, by way of Carmen Line Capital, by way of an anti-clam piracy group near you. Mr. Rock Lobster, welcome back to the program, sir.
You know, if it's not the clam pirates, it's the herons and the gulls taking the clams. I can't win. There's no winning in the springtime.
Well,
I'm calling it spring right now.
I can't help you with the nature part, but the humankind, I can perhaps get behind the anti-clam piracy there. All right, and then we go on out to the quiet, the tranquil. Maybe not that quiet and tranquil today because there's a party going on out there. Because it's an Uncle Mike type of day. That means we have to welcome on Uncle Mike Tusaw from St. Charles Wealth Management from a Twitter machine near you as at Mike Tusaw, blowing up the Twitter world out there. Mr. Uncle Mike, welcome back to the program, sir.
Never before in the history of the entire stock market has there ever been a better time to sell than right now. We have one of those days today, so always excited.
I'm pleased to say the Uncle Mike Twitter watch up to 76 followers, so you're blowing up. You're blowing up there on the old Twitters as we keep on rolling right on into the trading.
It's time to break down the latest topics, trades and trends in the world of options. It's time for The Trading Block.
All right, everybody, welcome to The Trading Block, the portion of the show where we break down what the heck is trading, what is lighting up our tapes. And coming into showtime here, we're seeing VIX take a little bit of a break, a little bit of an exhale, a little bit of a relaxation, as most of the major markets, as the Rock Lobster Uncle Mike alluded to, firmly in the green. S&P up, I should say, over 1.5%, closing in at 1.6%. Dow north of the 1% level. NASDAQ just feeling its oats again, up nearly 3%, about 2.75% as of a few minutes ago. And of course, that means all of our friends on the vol space taking a bit of a break today. VIX come into showtime was near 21.5, about 2160 or so. Puts it down almost 3 points, about 2.7 points from our last episode on Monday. VVIX actually hovering firm at about 112. That puts it pretty much exactly unched, which again, vol is moving. So kind of hard for it to get too far away from that 120 strike. Right now, VXX, a product that loves to fade, is fading off again since our last show, down about 0.8 of a point, right about 1420. Coming into showtime, and vol Q, aka the at the money vol of the NASDAQ 100 at about 26.5. That puts it down about 3.5 points from our last show, pretty much right at about a 30 when we gathered here together last on Monday. Of course, though, there's more going on in the markets today. Of course, we have the official stimulus passing and all that fun stuff, but it also marks perhaps an ignominious 1-year anniversary. Today is March 11th. It was exactly 1 year ago where the pandemic era kicked off officially. Do you remember where you were on March 11th last year? You probably do, because, of course, the World Health Organization officially declared it a pandemic for the first time. Of course, we had seen brewing concerns about spreading and everything else like that. The markets had already been roiled there, but at this point on March 11th is when the World Health Organization officially termed it a pandemic, and that really spooked markets. Of course, on the celebrity front, the first famous person everyone ever heard of who got it was Tom Hanks. He announced that day that he has it as well. NBA, of course, this one I think it hit home for a lot of people who kind of only tangentially paying attention at this point, was when the NBA canceled their season. That all happened on March 11th, exactly 1 year ago today, listeners. At that time, the S closed at shy of 27.5, 27.41. So about, 1,200 points, or about 44% below where it is right now. If we had said, at the nadir of that day on March 11th, when things looked pretty dire, that, hey, we'd have north of 500,000 deaths, 30 plus, I think, million cases in the U.S., the S&P would be 44% higher than where it was, I think you probably would have said we were crazy people. And yet that's how things turned out. VIX also closed on that day a little bit shy of 54, 53.90. So a whopping, about 32 points or so above where it is right now. Just setting the tone for where we were a year ago. Let's go back around the horn. Let's start with the unklest of Mikes. Hey, sir, what, if anything, do you recall about this event a year ago and this day a year ago and this kind of inauspicious anniversary? And then B, let's turn to lighter fare and happier Uncle Mike type fare. And what are your thoughts on yet another record pretty much across the board, sir?
Well, in terms of last year, I don't remember any specifically where I was when the big announcement was made or anything like that. But what I do remember is just how fast the news changed. It seemed like okay, we might have to shut down. Okay, we might shut down. Okay, we're shutting down. Okay, never leave the house. It was very much you had to watch the news every 5 minutes for new drastic changes in what was happening, new policies, new alerts, new everything. And I remember that. And I remember, we joked about it on the show. We called it the beer virus for a while. I'm myself guilty of that, thinking it might be a big deal. It might not be a big deal, but no one really knew. But then, I just remember the main thing from a year ago is just how quickly the news changed at the drop of a hat. So that's probably what the memories that I have from that. And then in terms of what's happening today and what's lighting up my tape, so to speak, of course, we are at new all-time highs in the S&P 500. So that's always a good thing if you're long, which I am, by the way. And watching that, Bitcoin continues to do its thing, and people continue to watch Bitcoin as well with that. That's up another, it's only up, Bitcoin itself is only up, I think, about 1/3%, which is actually nothing for Bitcoin, but that's continuing to go. What I'm looking at right now is that I've been talking about, and I think it's kind of been a story the last couple of weeks, has been the 10-year Treasury yields. It seems like 1.5% or 1.6% around that area. They don't seem to want to rise above that. We do have kind of a floor in the pricing of the 10-year note. So, I've said it the last couple of weeks on this show. I think we're at a pretty fair spot right now with the 10-year yield. I mean, don't get me wrong, with the holdings that I have, I'm more than happy for the yield to drop and have it go through the roof. It wouldn't bother me one bit. But I think with where we are, I think that we are going to stay in this area. I know a lot of people are saying right now that they could see the 10-year yield going north of 2% and beyond due to inflation, but I'm not quite there yet. I have my marks of where I'm looking at to see whether or not I think it's time to just get out of the 10-year note and sit in cash. And, I have my lines in the sand, so to speak, but I'm still a ways away from them just because of the fact that I still say that a year ago when this happened, approximately, when the Fed lowered interest rates to zero again, I think, number one, that was one cause of why the bond markets went higher. I mean, that's kind of the obvious, but another one is that I think that whenever crazy things happen, there is oftentimes a rush to U.S. government treasury securities. And I think that what happened is that we had a little bit of an overreaction at the time, and that's why it went as high as it did. So I still say that we're at a pretty fair level at this point. Now, I could change that opinion tomorrow. Of course, as with anything, I could be dead wrong, and the 10-year yield could be back over 4% again. Who knows? But I think that we're at a pretty fair spot right now, and I think we're going to be in this range for a pretty decent amount of time. I think news is out in that we're getting improvement with the vaccines. Stimulus news for this week seems to be pretty much a done deal. And that's kind of where we're at this stage. So I think we're in a fair spot for 10-year yields. The other thing that I'm finding, another unique thing about this market, is that oftentimes when the stocks go higher, VIX goes significantly lower than just a 4% drop when we have a 1.5% gain in the market. But it is the era with which we live. So VIX doesn't seem to want to go as low, but interested in hearing what Andrew has to say on the VIX today. And that's what's lighting up my tape.
Or you think Andrew will have something to say about VIX? I think he's too fixated on all things clam piracy. But let's see. Forget about Andrew. Let's see if his much more valuable, much more insightful alter ego, known as Volman, has anything to share on this subject. Mr. Volman, are you there, sir?
You know what? I can only translate for the Volman because he's a stick man. He doesn't talk. All I can do is
the brain waves. He sends the brain waves to you.
He does. He sends the brain waves. I find this okay. Well, VIX, everybody's realizing. So let's just do a little arithmetic, all right? Which is what, and I have some of my students are like, why isn't vol going down? Well, let's see. The Qs at the beginning of the week were 300. They're now 319. So that's what, an 8% move, a 9% move, something like that. It's moving almost 3% per day. That's a 48 vol for the Q. Not to mention last week, the little dust up we had last week, about 50 vol per day average for QQQ. A good chunk of those stocks are in the SPX. So basically what you had is a lot of stocks going up in the SPX that weren't Q stocks. Still, we're having 1.5% to 2% moves up per day. That is like minimum 20 vol, right? Actually, it's closer to 25. So how can't VIX go? Why doesn't VIX go down? Because the market's moving too much. It's been a symbol of this whole pandemic. As nasty as the downside was in March, the rallies that came back were equally, if not just as brutal, equally, if not more so. So hard for VIX to come down. And that's what we got. Now, 2164, this is basically within about a point. This is about the low of the last year. We've hit this number 5 or 6 times. This is where I go in and I take all the money I made during the week and I go waste it on VIX puts for the next month because I'm figuring, this pandemic will blow over and I'm going to do a 5x return. And the answer has been a resounding no for since when I started getting on this kicking around June. And eventually I'll stop doing it, I guess. But that's what we have. My only saving grace is I just don't do it too much. But the reality is VIX isn't going down until people start selling upside calls again. And who the heck wants to do that when you have a stock like GME up $100 a day? Or you have the SPX up at 1.5% per day. And then two is you need not only willing sellers, but you also need it just to stop moving. So 20 volatility and this whole vol complex at any other time would look ridiculously high. And for a reason, because we're moving. So, I trade vol two ways. In the drippy way that a lot of people trade the vol products, they kind of just rot and are ugly, so they sell premium. And you have kind of what I would call like the drip trade. Perfectly acceptable way to trade vol, right? And then every once in a while, you're kind of scrambling like a mad person to cover your deltas. But overall, it works as long as you can scramble and cover. The second part is the shock trade, which I like the action. So I'm kind of waiting for it to move. And to make a move lower until we stop these rallies. Now, my guess is we're about 45 points from 4,000 SPX. Tusa, as our resident bull, can comment on that. But, this is our third, fourth time bite at the apple. And maybe this is the time we go through it. I'm not stupid enough this time, actually, along some calls, and I'm watching them go up. And I'm like, okay, I'll just watch the calls go up to 4,000. So if the short side of my vol strangle doesn't make me money, maybe the long calls will. So I don't know how high we go or how far, but at least you do have some positive correlation today. I mean, actually, let me reverse that. You actually have the real negative correlation. Okay, SPX is going up and VIX is going down. So there is a little bit of reduction in vol on some of the upper strikes. My guess is, the skew will get a little more, get a little steeper on the downside. It was pretty steep yesterday on some of the stuff I looked at. And it's going to steepen up a little more today, most likely with the rally we have. So, that 3,900 put, the 3,800 put, all that stuff is going to get really, really, really juicy for all you vol sellers, right? And liquidity providers do that for a reason. They want somebody to sell them, right? So they're not going to let the vol drift lower on those strikes until somebody comes in and sells the crap out of them. It just hasn't really happened yet. That conviction to sell 3,700, 3,800, and now 3,900, it just hasn't materialized with the big sellers yet. That doesn't mean it won't. It just really hasn't happened in a big way yet. But that's how you're going to see VIX, right, at a lower number. You need those willing vol sellers. So, today I have volatility. If you go out to a very VIXy-like strike, the 3,900 strike, the 3,800 strike, I have the volatility on that strike up from 20 vol yesterday to 21.27 today. So, you have to put it in a little perspective. Like if the vol's not dropping in those out of the money puts, when we rally, we're rallying too strong, hard for VIX to go down. And that's where we are. It's not, and I don't think it's going to stop until we have like 3 weeks where the market just doesn't go anywhere. And people start kind of eating some decay. But at this point, there's not a big penalty for owning vol. You blink, we're down 3 or 4% in a couple days. You blink again, we're up 6 or 7% in 3 days. So like your penalty to own vol in this market, which has actually been okay for me, the long gamma has been pretty good. It's just not there. So it's a very weird market. It's a very volatile market with all-time highs. Again, everybody's going to reminisce and say a lot like 1999, 2000. You have some big valuations, although they took a big chunk of the valuation out. But we're moving. People are excited. The public's in the market in a huge way. They probably haven't been in the market to this extent since 2007 or 2000. So about every 10 years, the public gets excited about options. And usually, how that always ends in tears, or not always, but it does end somehow. And that's where we find ourselves. So I think just the high vol is a symptom of what's going on. We're moving. And there's a lot of big things being thrown around. And $2 trillion just recently, I believe, is going to pass. Now they're looking for a $3.5 to $4 trillion infrastructure spend. So, like rates going to 1.5%. Like we're spending money now at, I thought last year was nuts. Nothing compared to that. It makes the 2008 financial crisis. Considering everybody's just going to go back to work probably in about 3 months with the vaccine, the whole thing is a bit of a head scratcher at this point. And with all that money coursing in, is going into stocks, and that's what we're seeing. So anyway, that's my diatribe now over on why vol is not going down as much as as much as you would think with the rally.
Amazing how vol man sounds so much like the Rock Lobster. It's kind of eerie. I don't think I've ever seen those two in the same room together. But then again, I digress. Let's head on out now to what's lighting up the tape out there in the major indices and the major products you folks like to trade out there. And despite the action out there that's been moving in terms of price action up and down, listeners, in the volatility space, we're not seeing a ton of paper on the tape out there in VIX land, even though it just gapped up while the Rock Lobster was talking. It was at about 225,000. Now just gapped up to 255,000. So maybe he talked up a little bit of VIX options action. So that's a little bit healthier, a little bit north of 250,000 contracts as of a few minutes ago. But the ADV has also ticked up to about 650 again. So remember, it was north of 700,000 not too long ago. Then it fell off almost 100,000. So VIX getting a little bit more frothy. We'll see if it can. Looks like it probably is on pace to maybe hit that number today. We'll see. Another spurt of activity like it just had, and it'll probably be there. SPY closing in on 3 million contracts, 2.86 million as of a few minutes ago. The ADV 4.44. A lot of fours out there. The S 718,000 contracts on the tape. The ADV just around 1.25 million. So that's ticked up a bit recently as well. For a long time there was below 1 million, which if you watch the S, that's pretty light. The Qs at about 1.06 million contracts already. Again, not surprising. The Qs are kind of the action-packed beast out there these days. The ADV is a hefty 1.4 million. The Qs already almost on track for that, so they're going to blow past that today. And small cap land, IWM at about 550,000 contracts. The ADV 708,000. You want to hear more about what's going on in IWM land, those new contracts that is listed over there on SIBO, what's going on the options on CME, everything else. Stay tuned for TWIFO in a little bit. I know all you folks out there are kind of obsessed with all things small cap these days, so we're doing our darndest to bring you more info on that aspect of the marketplace. Let's go on out to the individual single names, see what you folks are slinging in your hot little hands out there today. And this top 10 list is kind of like just reflective of where we are here in 2021. These are kind of the names you would probably expect. If I had to throw together a top 10, I think most of these names right now at least would be on there. Starting with number 10, it's Game, 281,000 contracts. Let's see where our friend Game is hanging its hat today. Last I checked, it was actually having the temerity to sell off a little bit, which how dare it? Yes, 255 off over 8 handles out there right now. So interesting stuff out there. GameStop just yet again on another tier. Maybe they'll finally get around to selling some stock one of these days. Number 9, AMD, 297,000. AMD is kind of the little engine that could. It keeps fighting its way into the top 10. It says, forget about these memes. Forget about these newcomers to the top 10. Let us old school names show you how it's done. AMD, 297,000. Number 8, Facebook, breaking into 300K land, 357,000. Some hearings going on over there in D.C. that may look no bueno for the big tech titans out there. You gotta marvel sometimes at our country here. It's kind of fun. Every other country on the planet would kill to have these Leviathan corporate titans out there. But to our credit, America, we look at it and say, maybe that isn't the best thing out there. At least we'll have a debate about it, which is fascinating. And you see so many other state-run entities around the world trying to reach this level of dominance that most of these tech names have here in the U.S. So interesting stuff, no matter what side of the aisle you fall on, where you fall on. Should big tech be that big or not? Either way, it's interesting to have the conversation. And they're doing that out there right now. Facebook lighting up the tape as a result. Let's see how Facebook is looking, because the language sounds like both sides of the aisle actually looking a little bit more towards maybe taking a second look at that. You know what? It's not spooking Facebook, though, up nearly 5% today. So, hey, the prospect of looming and lingering antitrust legislation, let's rally the stock 5%. Number 7, you know where I'm going. AMC, that theater chain, the little engine that could out there. They actually, one of the few that actually took advantage of this pop to sell some stock out there. $10, pretty much even out there right now. So kind of an unch day. They're off their high. I think they hit nearly $12 recently out there. Let's see. Let's go out there. 11.88. Yeah, so close to $12. A little bit off that now, but obviously also well north of where they were not too long ago in the $5 range or so. Good for 368,000 contracts in AMC land. Number 6, going back across the street, our friends out there at Boeing. As far as I know, they haven't crashed any planes today, so hopefully, but it's still good for 487,000 contracts of Boeing. Lighting it up out there. It's up nearly 2% today, hovering right around 250. Let's see. Looks like they have another deal. They extended their deal with Southwest for the 737 MAX. So that could probably be the big driver out there, but still, that's a lot of paper for Boeing. Number 5, it's NEO, 562,000 contracts. Number 4, Palantir. It's kind of locked in that 3 to 4 range these days. 619,000 contracts. This name has just started printing options paper of late. It's up about 7% today, 26.5 or so. And man, this thing is just on fire yet again. 619, number 4. Number 3, it's Tesla, 707. Yes, I said 3 is Tesla. What could have usurped the mighty Tesla there, the mother of all meme stocks? Well, it's the sleepiest of names. It's GE. $12.12 as of a few minutes ago. Off about $1.15 or so, about 8.5%. But it's good for 795,000 contracts. My goodness. This thing was trading 14.17 a couple of sessions ago. So this thing's plunging, but the Dow is still managing to rally. So interesting stuff. Number 1, you know what it is. It's the big dog. It's Apple. Rarely for this time of day, on an active day, there's not a million contracts on the tape yet. Just 978,000 contracts. This is the first time in quite some time that we've seen Apple at this time of day below a million contracts. So read into that what you will. It's only ever so slightly, 978,000 contracts, but still interesting stuff there. Let's look really quickly out on the earnings front, see if we have anything interesting there. By the way, we have all the hot names, all the hot movers highlighted for you over there. Hot off the presses, actually. New reports there for you, theoptionsinsider.com. Let's see what we've got here. We've got Oracle popping off actually yesterday. So we have a move results for them. They were at 72.12. They were pricing in about 4%. They delivered nearly 9% to the dark side. So a little bit of outperformance there from an Oracle perspective. Right now, they're off about 6 2/3%, trading around 67.5. So they actually have rallied a little bit from there. That they got down at the time of this report, they're at 65.79. So they have bounced a little bit, but still interesting stuff afoot out here. We also have FOSL out there, makers of all these various watches and smart watches and everything else out there. They were at 18.06. They popped off yesterday after the bell as well. They were pricing in 13.2%. They delivered nearly 18%. And they're off about 17% right now to about 15 even. So, wow, outperformance in some interesting areas in terms of earnings volatility. Oracle and FOSL. Let's see what else we got here. Really quickly here. Let's see. Well, that's pretty much some of the main. Well, JD, we talked about JD before out here on the show. They were popping off. Actually, they reported already. They reported this morning before the bell. Like I said, this is hot off the presses here, listeners. They were at 89.33 going into their announcement. They were pricing in nearly 6%. And get this, listeners, as of this report, they were at $90 even. They had moved not even 1%. So, wow, talk about underperformance. Let's see if that is still the case out there in JD. Actually, they're at 90.02. They're kind of glued to the 90 strike almost eerily. That's interesting. So all that vol is going the way of the dodo out there, listeners. Let's see if the season, how it's shaping up right now. And we're looking at about a 77% as of right now in terms of how this season is shaping up. So if you 100% means you bought $1 worth of vol, you got $1 worth of movement out of it. Now you get about 77 cents on your dollar out there. So yet again, a blood red season for vol buyers. Let's see if it's blood red out there in the unusual activity realm. It is time to unleash our Eye of Sauron. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. Before we dive into all of our unusual activity, Mr. Rock Lobster, I know you were champing at the bit there to talk all things GE, a.k.a. the sleepy name that is suddenly a titan of our most active top 10 names here, sir. What's lighting up your tape in GE realm? Are you crazies over there? Are they trading it in pit land today, sir?
Yeah, the pit crazies are definitely trading it. Bob Lang, he does I know he has a good stock service or option trading service, but he mentioned it yesterday, and I'm positioned in this. I sold some 13 puts yesterday, and I sold some 12 puts today. They're doing a reverse split. Okay, a reverse freaking split. Now, they just sold a chunk of their air leasing business, but Tucson maybe can chime in. When was the last time a company that was actually climbing out of the basement, starting to make money and getting their act together, does a reverse split to somehow magically create value in their stock price? The only vehicle I know that reverse splits on a constant basis is because it sucks, and that's VXX and UVXY. GE, do those guys even know on that board what they've just done? They've pitched their company into the pit of despair. I think overall the fundamental business is getting better, which is why I sold puts. But I'm dying laughing as to what possessed these knuckleheads to do a reverse split in GE. You know, it just basically went from $10 to $14 in 2.5 months. And in 2 days, they crushed half of the entire rally just by doing reverse split. Because I think people don't get it. They're freaked out. Anyway, rant over on that one. But Tucson might have something to say about it, but I found that unbelievable, to be honest.
Tucson, anything to add on this GE mother of all reverse splits, sir?
Yeah, I don't get it, because I remember even when I was in college in my financial management classes, I can remember them saying the only time you do a reverse split is it's something to where you always need to, it's typically a sign that bad things are happening, and they're not very good typically. And so usually if you do a reverse split, it's because the stock's gone down so insanely much that they don't want to be considered a penny stock or something along those lines. So in this situation, I don't get it.
Yeah, some of the only times when like reverse splits make sense is in the product we love to lambaste all the time, like VXX, which is pretty much designed by its structure to erode to zero eventually. If they don't reverse split, the product will cease to exist. So in products like that, it makes a heck of a lot of sense. In GE, yeah, you're right. That's a bit of a different beast out there. Let's move on out now to see what our Eye of Sauron is unleashing on us today. Let's go on out. Going back, this is the name we talked about before. This is Constellium, SE, ticker symbol CSTM. They are a global manufacturer of rolled aluminum products, as the Brits like to say. Let's see, at about 16.40 right now, up nearly $1 or over 6% today. So a good day to be in the rolled aluminum business. I just like saying aluminum. That's probably why I remember this name from the Odd Block in the past, because it gave me a chance to say aluminum. All right, let's see what this thing has been up to over the course of the past year. A year ago, on that inauspicious day of March 11th, it was still holding up its head to about $7.45. In the next week or so, it got crushed down to $3.90. So that's when we saw the great nadir for the rolled aluminum business. And then, of course, it rallied up. You know what day it popped up to? June 8th, $9.75. Then it kind of gave up the ghost again. Never really got to that level again until October. It broke $10 again finally in October. So unlike a lot of the names you talked about, it did finally reach that level again before the end of the year. Then it seems like it was off to the races again for rolled aluminum. By January 7th, they were trading nearly $15, $14.70. And then they kind of sold off a bit down to about 12 and change in late January. Then they kind of been bouncing in this 12 to 14 range until looks like March kicked off. Then they kind of kicked off with just a gusto here. And between March 5th and now, they've rallied over $2. They're about $14 even, and now they're at $16.33 or so. So good run here recently for Constellium. Let's see what our Eye of Sauron has picked up out here. Looks like Mr. Rock Lobster. Perhaps someone may be thinking this recent pop a bit overdone, or maybe they're thinking this far but no farther, because they're coming in and selling. Actually, these are in the money calls right now. These are the March 16s going up 5,750 times for 38 cents. I don't have the market up in front of me right now, where these are trading right now. But I got to imagine these calls are a little bit higher because they're 33 cents in the money already. The market at the time was 35 cents at 70. Someone crushed a bid again for 38 cents, nearly 6,000 times. The stock was, a wee bit lower, 1577 at the time. So yeah, these things are bid in their face pretty aggressively. Looks like our friend, if it stays here, our friend will be unloading some rolled aluminum at the 16 level. There are earnings, but they are after expiration. Our next earnings cycle is April 28th. So this bad boy, not an earnings play. By the way, if you're wondering, almost a 50 vol, about a 48.6 vol, which is, you got on one hand say that's pretty juicy for a rolled aluminum manufacturer. I'm not going to get tired of saying that. But on the other hand, the price action, you can't really argue with it either. So Mr. Rock Lobster, what are your thoughts here? You think someone calling a near-term top in everyone's favorite rolled aluminum manufacturer, Constellium SE?
I swear, I still will swear that you pick these names only so you can have fun saying them. I still swear.
I maintain I have no control over the Eye of Sauron. It is its own beast. It goes where it will. And if sometimes if it lands on something fun, I'm just going to enjoy it.
And you're gonna roll with it. So I'm not even gonna bother to say aluminum like you are, because it makes no sense for me to say that when you're doing such a fantastic job.
I love that the Brits just add an I, just willy-nilly. Let's just throw an I into a word. Why not? Let's just add it. Aluminium. It does sound better. I'll give them that.
It is nicer. It sounds a little more proper. Potato, all that. So here's what the problem. It's not the problem with this market. It is the price action. Why is VIX 2176? Okay, real simple. This aluminum maker, right? Again, bid for commodities. One of our guys at Option Pit, Bill, he's been looking at all the commodity prices, thinks they're all, they got tons of room to run because we have literally an unlimited spending going on. So you can catch them at Option Pit, but this stock was $14 and it's $16.40 right now. It basically had a 1-year move in 4 days for a stock like this. That's why the vol's like this. The vol's already over 80 on this strike. So whoever sold those for 36 cents, they're already trading $1. So it's like, well, why would you bother to write any options in this market? It's like, because as soon as you do, you have sadness and regret. So I think, I would only hope that whoever did this just wrote it. They probably, if they bought, the stock a year ago, 1-year anniversary, it was only a $7 number. So, hey, if they get taken out at 16, they're not going to be too grumpy about it. But, I mean, for the most part, I think it's a right, and it's already blowing through the strike, which is why no one is selling calls in this market and why VIX is still, in the low 20s. This is a good example of it right there.
I like that. As soon as you sell options, you have sadness and regret. Leave it to our diehard cynic up in the great state of Maine there to lay that out for us. But you're right. I mean, it sounds on one hand absurd that a rolled aluminum, there it is again. I'm going to start typing I in the word now. It's seeped into my brain. But yes, it's absurd that an aluminum manufacturer is trading at these vol levels. On the other hand, you can't argue with the price action. It's merited. So at the end of the day, that's all vol is for all the debates we have about volatility. At the end of the day, the basic math for volatility is pretty straightforward and pretty simple. If it's moving, it equates to vol. And you can't argue that our rolled aluminum friend is not moving. So we'll be coming back to them and see how they fare. If for no other reason, then I get to say aluminum again. All right, let's move on to our next name before our listeners revolt upon us. Let's go out to, this is another one we talked about in the past. This is QEP Resources, to go British again for no apparent reason. They are ticker symbol QEP, trading today $4.57. A good pop for them, up 40 cents or nearly 9.5%, almost 10%. And what we found out here today, listeners, is looks like some corporate action related paper, or maybe perhaps the end of a corporate action related paper, because you see the 5 calls trading it up for some size today, going up initially 5,000 times for 25 cents, just gobbling up that offer, as many as they could get. By the way, if you're wondering, that was a 94 volatility, listeners. So if you thought the 50 vol in our sleepy aluminum manufacturer was high, this is nearly double that. But in the world of 1,000 implied vol GameStop, what the hell really is volatility anymore, I ask you? There are earnings, but they are outside of this cycle. They are April 28th. So just outside of this. It's not an earnings play. And more of these followed on. By the start of the show, 7,700 total had traded. Might be even more since then. And this is what makes it interesting is because this is an acquisition target. In fact, it has effectively already been acquired back in December of last year. By the way, this is a natural gas liquids company, listeners. They announced back on December that they were going to be acquired here by this company, Diamondback. And at the time, they proposed a value, which again, nat gas market was a little bit different back then. The small cap market that QEP is in, also a little bit different back then. And they had announced a deal. It was an all-stock deal. Actually, it was official, looks like, on December 21st, so a little bit later in December, that valued them at $2.29 per share, which, again, pretty basic math. They're at $4.50 right now. That no-brainer when it's looking at from a shareholder perspective. And that's what one of the major shareholders here is arguing. One of the big shareholders has about 13 million shares, or about 5-6%. Glazer Capital put out a big release recently saying they're urging the shareholders to reject this merger because it completely undervalues where the stock should be from a nat gas valuation perspective. And also they say from the movement and valuations you're seeing in other small cap names. They say, according to them, there's a lot more upside in this stock, way beyond the $2 level. And it's trading $4.56, even though the merger price was $2.29. So again, it was a bit of a ratio, a stock deal. So that's a bit of a moving target. They'll have to see what the ratio actually was. 0.05 shares of Diamondback. So we'll have to go see what Diamondback is worth for comparison. But still, fascinating stuff out here. A little bit of a back and forth, a little bit maybe of a contentious acquisition, and the options paper at least showing no slight in terms of movement. This thing was kind of glued to the four handle for a while, and now it's just rallied almost I got up to about 2/3 of a dollar or so by this morning. Hit a high of 467, coming off it a little bit now. But interesting paper, Mr. Rock Lobster. Looks like some folks are wagering on this deal not going through and putting their money on the 5 strike, sir.
Well, you look at this and you go, yes. Also, did you notice the ticker for Diamondback? It's FANG. Once again,
that's a good one.
My theory is about you only choose things with the wackiest symbols ever, or something you can pronounce, is still in force. Tucson, I want you to back me up on this. Back me up on this, man. I need some help. It's for sure. But
no question about it. Total backup here.
There you go. I think it is now settled. It is at least 2 against 1, although I know on the Option Block Radio conglomerate, the CEO in chief always has those extra votes in his pocket as a benign dictator. But anyway, so do I agree with Glazer saying that this Diamondback is basically buying nat gas for nothing? Yes. And it looks like if this is a sliding, the merger is kind of a sliding ratio. So is Diamondback's value going up? Therefore, QEP's value is going up. So I'm trying to check that out right now. Because this is
Diamondback's at about 85, close to $85, 84 and change.
Yeah, so it does look like this stock has taken off a little bit, maybe because everybody's figured, wow, they're getting something for nothing. But that's what the big producers do. They eat the little producers. Wow, quite a yield on this thing.
FANG was $45 when they announced the deals. Wow. Yeah, a lot has happened since December in this market.
Right. So of all stock deal, I mean, the value of those QEP shares are going to go up. So do I agree with the shareholder lawsuit? Yeah, this is at least you get stock. You're not getting nothing, but you're certainly not getting as much FANG as you think you should be getting. I think maybe that's their biggest gripe. They're not getting enough. They're not getting enough Diamondback for their QEP. So, before oil, all the oil and gas assets took off. Listen, this board could be just as stupid as the GE board. If GE can do a reverse split when the stock is finally at a 52-week high, a company could give themselves away like this. And maybe they just need the cash because maybe they're a little cash poor but have a lot of assets. So Anyway, as I look at this as a trade, is somebody buying this? I think it looks like a cheap shot because really what you're buying is, you're actually buying a FANG, and the fact that FANG is moving all over the place, and or Diamondback is. So it's kind of like a sneaky way to buy that stock because of the ARB that's going on, the deal ARB. So QEP will follow FANG. So it doesn't look like an unreasonable shot with a month to go. To have your calls do a nice double because FANG doesn't need to do very much. QEP pops and you make your money. So I think a reasonable trade at least, right?
Yeah, on this current ratio that values QEP at about 421. So a wee bit shy of where it is right now, but obviously well north of 229 back when they announced the deal. So interesting stuff. We'll keep an eye on this one as well. What are your thoughts on this one, listeners? Is it a good flyer to the upside, or are they perhaps a bridge too far on that 5 strike? That's pretty lofty above this 420 level. But if the deal doesn't go through, all bets are off. We got more to review here, but let's save that because you folks got some Qs and we got some As. Let's get to a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, listeners, welcome to the Mail Block where you guys take the reins. You ask us questions. Sometimes we turn the spotlight back on you. We did it about a month ago, the last time VIX really threatened and actually broke through that 20 handle ever so briefly. It was for a few minutes on a Friday, and that was about it. But we asked you then, we said, going out in about a month, what do you guys think? Is this the new normal? Is VIX going to close above or below 20 a month from now? And over 2/3 of you, 68.6% of you said it was going to close above 20, which fast forward, because this was about the 11th, I believe, when we posted this, and it finalized around the 19th. So about exactly a month ago. Below 20 was about 31.4%. So 2/3 of you were on the winning side of that. So we thought, interesting time to do that again as we're threatening the 20 handle yet again, and as the Rock Lobster is loading up on his ever-doomed 21 puts out there in VIX land. So we're going back into that fray again. 1 month from now, will VIX be above or below 20? It went live just before the show, so it's a pretty new poll out there. Let's go around the horn. Let's start with you, Mr. Uncle Mike, sir. What are your thoughts on the poll, if you have them? And B, more importantly, what do you think our audience is going to say? Last time they faded the sell-off in vol, they were to the upside, and that was correct. Will they do it again, sir?
I think the audience is going to say below 20, just because of the fact that this is at some point it's going to go below 20, and the fact that it hasn't yet, I think it's going to, because I'm going to say that this is what I think, and this is what the audience thinks. Over the course of the next couple months, fear is becoming less and less and less, or the reasons to be fearful are becoming less and less and less and less. So, and that's from a public standpoint. Maybe behind the scenes, there's lots of reasons to be fearful. Who knows? But I think that VIX is going to go below 20, and I think the audience agrees with me.
Interesting. Mr. Rock Lobster, what are your thoughts? And if Volman has a vote, have at it.
I actually do think VIX is going to go below 20. I mean, if we're at 1.5 and we're not selling off at this point, the only way it's going to do that is if we stop rallying so viciously. So I assume people will get all full at some point, but yeah, I think we will see something below 20.
All right, let's check in with the live results again. This went live before the show, so it's still a baby poll, but so far the numbers are exactly, almost eerily the same as they were last time. Last time it was 68.6% above 20 and 31.4% below 20. Right now it's 66.7% above 20 and 33.3%. So it's 2/3 and exactly 1/3 there for below 20. Interesting. Again, that's early blush, but interesting stuff out there. Let's go out to our live listeners. My boy Luigi says, here's at least one more time to say aluminum. Well, thank you very much, my boy Luigi. You can never have too many opportunities to say aluminum. I defy you now when you're going home and you're covering your leftovers after dinner to not say, I'm covering the potatoes in aluminum, dear. It just sounds much nicer, much higher class, doesn't it, than putting it in aluminum, like us gauche Americans like to say here. All right. Tony Weber also in the live chat asking, is GE still in the Dow? I thought they got the boots. Yes, you are correct. I said GE was in the Dow earlier, but you're right. They got kicked back around 2018, which is funny to think. You look at the list of what's in the Dow now, and it kind of makes you wonder. This is the Dow, but hey, 3M, Amex, Amgen, Apple. That's always hilarious to me that they are in the Dow. Boeing, our friends across the street there, Caterpillar, Chevron, Cisco, Uncle Mike, cover your ears, Coca-Cola, Disney, Dow Chemical, Goldman Sachs, Home Depot, Honeywell, IBM, Intel, J&J, JP Morgan, Mickey D's, Merck, Microsoft, another interesting one to have in the Dow, Nike, Procter & Gamble, Salesforce, Travelers, United Health, Visa, Walgreens, and Walmart. So yes, that is your Dow 30 now. I got a little excited. GE was until 2018, but it's so long they've been emblematic. That kind of tells you how our economy has changed, because GE was the Dow for so long, right? And these days now, who knows what the hell it is? They spun off most of their valuable divisions. They're reverse splitting. I don't think anyone has really a good semblance, including the people who are running GE. What the hell is going on over there? What do you think? He goes on to ask, what do you think is the next stopping level for GE? $11 around the 200-day moving average. Mr. Rock Lobster, it sounds like you've been watching GE quite a bit. What did you say? You sold the 13 put out there? Is that what you did?
Yeah, I sold the 13 puts yesterday for 44 cents, and I sold the 12 puts today for 44 cents. So I am long some of the 9 puts. So that's kind of what I do. I buy some out of the money puts, and then I just keep selling puts against them usually for 3 months. And that's kind of what I'm doing on GE. So I figured, yeah, and maybe they'll just pull this stupid idea off the shelf and say, wait a minute, this was all a mistake. We don't want to do this. But I think a lot of people just don't want to deal with the stock post-split. Like, I think the algos are really giving it a crush. And again, I think it's a loss of confidence thing as well, short-term. So, I think the trajectory is still okay, even though they just picked the dumbest idea possible to how to express it. So that's what I got. And, I don't mind, I'm doing this to acquire the shares, but we'll see how it goes.
Mr. Uncle Mike, is GE part of the strategic night portfolio? And if so, do you have any thoughts for Tony here on the next stopping point here for GE? He proposes the 11 handle, sir.
Well, the 20-year high for GE is, and this is before the new post-split, based on current prices, the 20-year high that I'm seeing is at the $53 level. But in reality, if you look back to October 2016, it was at 32. And that was kind of a key level for it, because that was also a bottom for it back in 2005. So I think it could have a little bit more upside to it, because we are right around levels with which it was at, probably about a year ago, in December of 2019. So we're getting to those levels. If we can break through here, we could have a little bit more upside to go. So we have that, but I really don't understand the stock split. That's one thing that just makes me very concerned about it, as to why they're doing a reverse stock split.
Yeah, interesting stuff afoot here. We got Luigi chiming in again saying he thinks VIX will be below 20. Well, get out there, vote in our poll. Your voice is not being heard right now. The above 20s are winning out there. As we keep on rolling into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on for the rest of this week until our next show here on Monday. And coming into the show time, we saw VIX at around 2160 or so. It's still a little bit around that level, actually a little bit north of it right now, but not a lot of huge movement out there. S&P still up about 1.3%. Dow having given up a little bit. Both looks like most of them have given up their highs. Dow's back below the up 1% level up. They're still firmly in the green, but not quite as effervescent as they were to kick off the show. Let's go back around the horn. We'll start with Uncle Mike, sir. What are you keeping an eye on for the rest of this week until we can gather here together on Monday?
Well, 10-year note, just seeing if we're staying around the levels with which we're staying right now, as well as the S&P 500, seeing if we can make a run at the 4,000 level. We're 50 points away, so we need to basically have another slightly over 1% day in the market to do that. Could happen today, or it could never happen. Of course, we never know with that. So watching those numbers and just making sure that the stimulus bill passes this week. It looks like it's going to, but just want to make sure that we don't have any crazy surprises with that could impact the market. So a lot of macro things.
A lot of macro things. You're like the new viceroy here on the show, talking about the 10-year note and all things macro. Mr. Rock Lobster, same question for you. What are you and your compatriot there, Mr. Volman, keeping an eye on, at least until volatility views tomorrow? It should be a good one. It should be a jam-packed show tomorrow.
Yeah, I might be there. Before Mark, we got Mark. We're working Mark like a dog. He's doing so many different things. Oh my God, he's in high demand. It's good to see him getting out there. So what am I looking at? Well, can we break 21? Maybe. I'm almost totally out of my marks this time. I actually didn't let them go to zero, even though they really want to try. And I moved to April, which again, I like unbelievable prices. Like April future is $26. So there's a huge amount of future premium in there. It's just not going away. It's been leaving very slowly. So I am watching that, and I have to say I'm waiting for the 4,000 number. I think it happens this week. Although I said that last week or the week before, but now that we're here again, and the market, the government's committed to spending all this dough, and the market doesn't give a damn, and treasuries are 1.5%. Hey, what the heck? And don't forget, the Q sold off quite a bit, so they've got a little room to help a move to 4,000. So I think that's what we're going to see. So I'm hoping, because I own some calls, and that would be a very nice place to hit the old exit.
That would be indeed. And unfortunately, that music means we have to hit the exit on this show as well, listeners, but fear not. If you need more in your ear holes, if you're listening live, stay tuned. We'll pump some fun stuff in there. OBC, OPR. We'll be back in exactly half an hour for a deep dive into everything. Lighten it up over there at CME across the broad spectrum. Maybe some rates, maybe some ag, maybe some metals, some equities. Who knows what the hell's going to make it on the show? You got to tune in to TWIFO every week to find out. But before we go, let's go back around the horn. Let's start with the rockingest of lobsters, Mr. Lobster, sir. If folks want to reach out to Volman, where should they go? What should they do?
Come to optionpit.com, go to memberships. You can do our Shiny Trade Club, our Trading Legion, our Robinhood or Sharp Bets Trader. Although Option Pit I'm no longer going to be doing one-on-one mentoring. We're pretty much doing the last of it, which is the end of a 10-year session. So this will be the last group that I do. So everybody that wanted to learn straight one-on-one, that won't really be happening anymore. As we move to more like group mentoring and stuff, mostly just because we have too many people now. It's not a bad problem. It's a good problem, but that type of stuff we'll still be just doing it in group sessions. So we still have a lot of education. That's still what we do, and we're growing in leaps and bounds. So come on by, check it out. And if you have questions, just send me to Andrew@optionpit.com. There you go.
You need the Vol phone. Like you used to have the Bat phone, and Commissioner Gordon would ring it up and call Batman. You need the red Vol phone on your desk. And when it rings, it's for Volman. And you just pick it up, and whatever emergency Volman needs to deal with, you answer it and say Volman. There you go. I like it. There you go. See, I'm giving you all this just gold in terms of ideas. Check it out for yourselves. Maybe you can hit up the Vol phone. OptionPit.com is the place to go. He doesn't have a Vol phone, but he's got a cool Twitter handle at Mike Tusaw. Mr. Uncle Mike, what can folks find if they go follow you, sir?
Well, I'm hoping by next week that I'm going to have the extended strategy block blog on my website. No promises, but there's just a lot of moving parts in my world with compliance and along with technology, of course, like anyone deals with. But hoping to get all that done by next week. So what I'm hoping for is that on the strategy block on Monday, I'm going to announce the premiere of the extended strategy block blog that'll be posted and shared on Twitter. So make sure you follow me soon, so that way you don't get kicked out for too many followers. Or wait, that doesn't happen on Twitter. Never mind. Okay, that's what's going on at Mike Tucson. If you want to learn more about me on my financial planning and everything with which I do in the option world, stcharleswealth.com.
There you go. stcharleswealth.com is the place to go. At Mike Tusaw on Twitter. And on behalf of Uncle Mike and the Rock Lobster and our friends over there at Demand Derivatives, check them out. Everyone's looking for hot, cool new fintech investments these days. These things are lighting up platforms like Seed Invest and others. These guys are doing one as well over there at Net Capital in terms of a raise you guys can actually participate in. So go to demandderivatives.com, click on the crowdfunding link to begin your journey into the world of volatility. Like trading on exchanges, maybe you want to buy a piece of one. Demand Derivatives is the place to go. On behalf of all of them, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in your questions, for chiming in about aluminum and everything else. We'll see you back here in exactly half an hour for TWIFO. Back again tomorrow, noon Central, 1 p.m. Eastern, for Vol Views. Then it all kicks off again on Monday. Another episode of the Option Block.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.